Good morning, everybody. So we got new channel member. Thanks for doing that. I appreciate it as always. A Mad, Gaten, Don, Arturo, Svenmorn, Steve. We got Lieutenant Colonel Goose, Sergio, Mary, Mark, Ed, Scott, Diane. Good to see everybody. Sledge down there pulling in. Morning, my monsters, my magnificent monsters of capital. Welcome back to the show. So, how was your Wednesday for trading? Was it relaxing? Did you have a nice cup of coffee? Did you read the paper? Or were you, like the rest of the financial world, kind of glued to your screen, mainlining X, waiting for World War III to kick off in full? Because for a few glorious, heart-pounding hours, looked like we were sending bombers over to Iran and might finally kick off the big one. The one that gold bugs and oil barons have been dreaming about. Tensions with Iran were boiling over. The algorithms were screaming. The headlines were practically writing themselves. And then, with a post, it was all gone. All gone. Turns out that starting a war isn't as easy as it looks on TV. Who knew? Apparently, you need things like aircraft carriers to actually be in the right place and a plan, not just we're going to punish you. A plan for what happens after you started the whole shock and awe thing. The White House, in a stunning display of foresight, realized that didn't quite have the plan after the first part in place. So this whole action on Iran called off for now. And just like the geopolitical premium that had been frantically priced into oil and precious metals, that kind of evaporated too. Crude, which had been flirting with a breakout through 60, came flashing back down to earth. And silver, volatile, poor, sweet silver, took a swan dive off a 10-story building, plunging down $6 in the blink of an eye from a record-breaking 92 all the way down to 86. And be careful out there. A lot of people who bought at the top of that top candle having a bad morning today. But here's the thing. While everybody's distracted by the shiny object of a potential war, they missed the real story here. The story that was driving this whole train long before Iran was making headlines. And that, my friends, is where the opportunity lies today. See, this whole silver saga isn't about missiles and political posturing, even though that was adding to the fire yesterday. It's a story about much bigger, much more, let's say, resource intensive. It's a fancy term for countries realizing that the stuff that they dig out of the ground is a weapon. And right now, the two biggest players in that game are US and China. For years, we've been in a structural deficit of silver. That means we use more of it than we're actually producing. So we're actually taking out of the stockpiles that we've built for years. Because silver isn't just for silverware and silverware, for pretty jewelry and vampire bullets. It's everything. It's in your phone, it's in your laptop, it's in your solar panels, it's in your batteries, it's in your electric vehicles. It's the lifeblood of modern technological world. And China knows this because they build it all. They're the biggest producers of all the things that use silver. And on January 1st, they pulled a classic power move. They reclassified silver as a strategic material. Kind of put it in the same category as rare earths and slapped on export controls. And they basically said, you know what? If you want to get some silver, it's going to cost you. Elon Musk himself tweeted, well, this is not good. You think? So, You have this massive ongoing supply shortage. You have skyrocketing industrial demand, and now you have the world's second biggest economy turning off the spigot. And then you have the London place where physical delivery happens is at the lowest levels we've seen in decades. You've got paper silver 300 times, like 300 times bigger than the actual vaults in the COMEX. So Iran was just a hiccup on the way. And this perfect storm sent silver on a historical run. And Iran just threw a little extra jet fuel on the already raging fire. So what does this mean for us? The savvy type monsters that might take advantage of this. It means yesterday's panic, potentially a gift. The market, in its infinite wisdom, threw the baby out with the bathwater. And no war in the headline, and then everything selling kind of means, you got to be careful. We're seeing that safe haven type stuff pull back immediately, ignoring the rock solid demand shortage underneath it. $6 drop in silver, probably not a reason to panic, but it is an opportunity. But it may not be the bottom yet. Wait for the bottom. The structural deficit hasn't really gone away. The whole narrative around it hasn't really changed at all. The export controls are still in place for China. The industrial demand is still growing. We're going to build a bunch of these data centers and AI, stuff that we put in the data centers is going to use silver. All these GPUs, all these server racks, uses a lot of copper, but it uses silver too. The industrial demand just keeps climbing. Some of the big banks are calling for $100 silver by March. Others are saying we could see an amazing rally to 150. And if we just put it back to the historical ratio, gold to silver, we could see 300. So this is a little wrinkle. We saw yesterday, or maybe it was 2 days back, we saw the U.S. Mint stop selling silver coins. We saw Ampenex, however you say that, Ampenex cutting off any orders that were under $10,000. And we put a $10,000 minimum on the largest gold and silver dealer out there. That's pretty crazy. That happened yesterday afternoon, if you didn't know. There's some little bitty wrinkles in this whole story. There's some shortages. There's some crazy stuff happening. Be careful. I'm perma-cautious. I can't help it. If you're playing the leverage way, be really careful. If you're trying to play options on this stuff, you can get ripped pretty hard. This week is a commodity index rebalancing week. That means there's a lot of stuff getting jockeyed around in the background. A bunch of big funds are contractually obligated to sell billions of dollars worth of gold and silver because it's gotten a little bit worth too much. The dollar value of it is too big in their indexes. Yesterday, a little bit of a dip, fire sale, but there may be a little more dip to come before this all gets balanced out. Talked about that a couple days ago. So how do you play it? Well, you can always buy physical silver, but you're going to pay a hefty premium right now. Dealers are charging $8, $10, maybe even more dollars an ounce over the spot price because supply is that tight. Supply and demand. A better move might be to look at some of the silver miners. They're leveraged to the price of the metal, and they kind of got punched in the face last night. This pullback could be an entry point for some of the best. Be careful on the sketchier ones. And let's not forget the bigger picture. The US dollar has been getting weaker. And that's a tailwind for all commodities to go higher. It makes them cheaper for foreign buyers. And this trend is maybe likely to continue. We have a downtrend in the dollar. Watch out, though. If it breaks through the daily roadmap line and starts an uptrend, this whole thing could start unraveling. Now, a continued push down in the dollar would be good news for gold and silver, and even natural gas and copper, platinum, palladium, other commodities. They might be poised for a better year than oil, at least until oil finds a bottom. So look, this whole thing, there's no simple story to it. It's chaotic, it's emotional, irrational, and everything gets spooked by headlines and tweets and narratives, and we chase it up, we chase it down. In the long run, supply and demand, the fundamentals of supply and demand always win. Silver, right now, the demand is stronger than it's been in decades, and it's not looking like it's going away. The war drums may be quiet for the moment, but the resource war just getting started. So don't get whipsawed by the noise. I've warned about being careful. The charts say we're due for a pullback in gold and silver. So just be careful. Keep your eyes on real stories. And for heaven's sakes, don't be panic selling. Don't be buying at the top. Panic selling on a drop. Selling the dips. Buying the rips. Be careful, all right? Because a single change in the narrative can have big consequences. Anyway, where we head next? Looks like we got the all clear for today. Jump over here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I make predictions. Sometimes they come true, but I have no crystal ball. I have a bag of unicorn dust and sprinkle it out there as much as I can, but it's really designed for climbing, not for predicting anything. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you might lose money. If you want somebody to tell you what to do, you can hire and consult somebody for that, but nobody's going to help you do better than you taking a vested interest in your own financial well-being. Nobody cares about your money more than you. If you think they do, well, sure, your money will go find somebody else to live with. So we've got a couple Fed members speaking this morning and just a bunch of nothing for today and tomorrow, economic news-wise. Story yesterday was about PPI a little bit. Saw retail sales ticking up just a little bit. But just kind of in this range that we've been in for months. So no shocking super huge growth, no shocking super huge dip on retail sales. I think it did surprise to the upside a little bit. PPI, there was a surprise energy increase that wasn't, I don't know how that's a surprise. I mean, seeing oil prices tick up and we're seeing electricity prices tick up. How is it a surprise? Now, I just don't know if I believe the numbers, though. I just don't know if I believe the numbers, because if you recalculate this stuff the way they used to do it, like in the 80s, we're still sitting at crazy high inflation. Prices still keep running up. But if you do it the way they've been doing it lately, everything's kind of chilled out. But this is still almost 3% increases per year right now. Still an annual pace of almost 3%. That means right now, things that cost $100, when we get to next January, they cost $103 or $102.70. Well, that's not really under control. That's seems like we're running a little rich to me. That's still prices going higher at quite a clip. So maybe not 7% or 8%, but you know, if you do it the old way, maybe we are closer to 7 or 8%. I know food prices just, it seems like it used to be $20. You know, go to the store, buy what you need for dinner for $20. Now it seems like go to the store, it's $100. Now it seems like everything's $100. Go out to dinner, $100. Go out to the movies, $100. Go to the grocery store, $100. Where's all that stop? I don't know. Crazy. So look at the charts. How do we make money today? ES, get a nice little recovery here. We did dip down. Found some supports. Let's check her out here. We had this low. We had this high. We bottomed right at the 618 of that move. Now we're turning higher. Here's this high. Here's this low. We're pushing on through. This sets the stage for continuation right up here. So far we held it, turned back higher, setting up for a rally. Didn't get below this level. Didn't get below 6,900. That's what we look like on ES right now. In Q went a little deeper and is right back up here in the resistance. So this one may be the tell if we break through that high that we made. Gosh, what was it? Tuesday? If we break through that high Tuesday, this thing might finally send me an actual alert in there, please. Come on, TradingView. Quit farting around here. Oh my goodness. Come on. It's gonna be that kind of morning, huh? One of these things. See, how'd y'all vote on the poll? Looks like 83% optimistic for an up day, 17% a little bit pessimistic. Here we go. Come on, NQ. So if we can break through there, that high from Tuesday, set my alert, please. We have the potential to rally on up here, 26, 27. Now the bigger move here. This is why I'm cautious on this. We dipped a little low on this retrace. Kind of broke the uptrend of lows a little bit. Poked in here. Showing signs of weakness. So if we turn down from right up in here, watch out on that. Can't zoom out anymore. See, this did poke through. Like we poked in here and we got deeper here. Now we're back testing, really. If you lined it up here, 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 here. We're kind of back testing this right now. If this turns down suddenly, gets below the low from yesterday, probably got a bigger downside cooking. So this is the warning. It shows up on NQ, but not on S&P. Right there. Cool. We're going to be like this all day. No watch list. Man. Come on, TradingView. Load it up. Yeah, we at least got... There we go. So Russell is set for this 2740. We're still set for that rally. Right there. And the Russell NASDAQ ratio... Let's see. I'm trying to remember. Let's just see. NDX divided by RUT. Or maybe it's RUT divided by NDX. Yeah. The Russell NASDAQ ratio has turned up for the first time, and I mean, it's been beaten down here. We're the highest we've been basically since the beginning of 2025. So this could take a little move up. Small caps versus big tech. It's been a downtrend for a long time. If you haven't noticed, been pretty beaten down, but that doesn't mean we don't get one of these little hiccups in here. So Russell's been out underperforming pretty bad compared to NASDAQ. If you haven't noticed, Russell hadn't really gone anywhere in years. And NASDAQ, it just keeps climbing like a monster. So, but this thing broke higher than it's been for a year. It's kind of interesting. Small caps coming into favor a little bit. That's opportunity. Oil came up to the roadmap line and promptly rejected, just as I thought we would. If we push down in here, get down to the low 50, maybe even the high 40s, we'll probably see that war rhetoric kick back up and get the spike and the breakout. That's what I mean, it's just crazy. That's exactly where I thought we'd turn down. What the reason was, I didn't know. So I think we'll see this push back down, and then we'll see the war rhetoric spike back up, and then we'll break out. Probably what's going to happen. Funny enough, gold just consolidating at the top, even though it seems like some giant pullback. We're just sitting here, been in this vicinity for 4 days. What's next? What causes the next pop? I don't know, but here's the levels. Next resistance higher, 46.60, 47.70, 48.60, 48.94, and 5,000 coming up right up here. Ultimately, we may come up just shy of that and do some sort of pullback before we can break through, if we're going to break through. There's no guarantees here. Silver, everybody wants to know how high is she going to go. We're on a pullback, and another one of these big pullbacks, which, they're not really that big, but we could see another pullback. But then everybody realizes that the shortage is still on, and we keep going higher. Now, you play AGQ, the leveraged ticker on silver, it can be pretty drastic on these pullbacks. Remember, a 50% pullback on silver can take this all the way down to 0. Be careful. We've already made the move I expected to make. This thing is going straight parabolically, straight up. Straight up can be straight down. That's my warning right now. That's the warning. Be careful. And that was the #1 decliner today, AGQ. Looking at some of the other stuff. Bitcoin. Taking a nice shot at the roadmap line. Didn't quite touch it. Lots of rhetoric around this is the breakout we've been waiting for. Watch out right here. We'll get through that. More resistance at 106. That's where the 618, 61.8% retrace resides from the October to November drop. 106,000. That's a major resistance. If we clear that, then making new all-time highs starts being higher probability. As long as we're underneath this, still a downtrend. As long as we're underneath this, still have opportunity to get continuation for a downtrend. So I'm not too excited yet, and we didn't even touch the roadmap line before we started a red candle here today. Be careful. Ethereum did hit the roadmap line, but we didn't poke through yesterday despite the bullishness on Bitcoin. Couldn't get any continuation, but we're not dropping big either. So this could be a tell that we might break on through, back test, and get the move on higher. Now, the dominance for Bitcoin. If we break down, now this is interesting how rejected the roadmap line, rejected the roadmap line. If we break down below this low we had back here in September, this is probably an indication that we're in crypto winter. Bitcoin is probably going to finish consolidating for the next 10 months or so, while Ethereum and other altcoins may spike a little high and then do a correction themselves. Just be careful. They don't have to spike higher highs, just spike a high. NKD keeps marching higher, and this is indicating we may take the U.S. markets and risk on assets like Bitcoin and Ethereum higher. Dollar trying to poke through the roadmap line. So despite that weak dollar narrative, showing some strength. If we get through, maybe backtest, break on through 102. The narrative around a weak dollar is going to change very drastically, very quickly. We're going to see a short dollar squeeze, and this thing may pop up all the way back up very drastically, very quickly, back near the highs, possibly breaking out to new highs up around 130. That would put downward pressure on a lot of commodities if we see the dollar gain a lot of strength. Would put a lot of pressure on continued higher prices on commodities. So this is a warning sign right here. If we start breaking out above these highs we had from November, December, watch out. You may want to put an alert here. This could put negative pressure on gold and silver and oil and copper and all those things. That's a strong dollar relative to other currencies. Apple held up really well despite the pullback yesterday in the market, but still set for dipping on down to this support right there. Still set for a dip. Amazon can come all the way back down here. Be careful. The low is down here for the pattern. A dollar below the low is like 212. So it can come all the way down here and then come all the way back up here to the targets and still work. All right. This pattern fired off. Has a historical win rate, 95.8%. That means 23 out of 24 trades have worked out. 23 times out of the 24 times it's done this roadmap bounce on a daily chart, it goes up to hit the 1448. Could this be the second time it fails? Absolutely. $265 would be the upside target. Dollar below that low. Somewhere around 212 would be the stop out. You got to decide if this is worth your risk or not. Profit factor is absolutely insane. It's maybe the single best trending ticker I know of, but that doesn't mean it works every time. Google, still sitting here at that 337 area. Still has that potential to come on up to 385. But it also has a potential to take the bigger retrace right down here at 260. And depending on how long it takes, it could be 300. Meta. Still looking for this to find some support here. And the lower it goes, the less excited I am about this. I was looking for it to hold at 618, and we're poking on down. If we start back below like 605, tips the odds we're going lower low than we did, than the low we made back here at Thanksgiving. Not great for Meta if we keep grinding lower. Microsoft seems to have broken out to the downside. That sets up the potential that we see this happen right here. Somewhere down around that 415, 420 area. Right down there, that 618 retrace of this whole big move up. From this low back here in April, Liberation Day, to this high up here in July, that crazy run up, that would be a 618 retrace back down to that 413 area. Similar to what Meta did on the bigger picture. Meta made this big run up from April up through August, came down here in November, bounced off that 618. I want to see that hold, but if we don't hold this higher 618 here, which we're already pushing below it, we may push down just a little bit lower, maybe get a push down into that 565 area, and then try to bounce off of that. So Microsoft looks like we're going to push on down. NVIDIA. Golly. Still got the wheeze. We're trying to hold on to this right there. It's kind of a flip point on the chart at 182. Trying to hold on to it. If we push below it right now, have the roadmap line down here at 170-ish. And if we get below that, 150 would be the test area. And that's where we topped out back December 24, January 25. We topped out in that 150 area last year, and we may need to go revisit it. 195 is the resistance up here. If we stay below that, downward pressure. If we can get above it, we can set up new upside targets around 220, 220, 230. Tesla, holding on to the 618 retrace. Yesterday, we spiked down to it. Right there. Move up, retrace, held. This is what I wanted to see Meta do. Now we need to get some upside. We've got to break back above that prior high right there from a couple days back. It's going pretty quick. You know, this was just Monday. Got to break above Monday's high. And that sets up the bigger upside move. Potentially up into the 510 to 520 area. Right here. Don't get too crazy on me right yet. This sets up the move right up here. And then that can lead to continuation on up to the bigger target at 550. Now we do have earnings coming up right here. If we get super spicy in the next few days, earnings could yield a pullback that sets us up for the bigger move. Netflix still grinding lower. Still looking for that dip to the bottom of the box, down around 85. I go pull gainers and put them on the gainers list. I go pull, that's things moving $2 or more up in the pre-market, which a lot of those continue to climb during the day. And then I pull decliners, which are things moving down $2 more in the pre-market, and put them on a decliners list. Those tend to stay beaten down, but some stuff reverses, like Goldman Sachs there. And then I pull some setups. And I had 24 setups today. So since we're already getting late in the show, I'm just going to hit some setups. These are things with the daily pattern potentially set up for an entry today. Let's go with CNQ. Let's pull up the US version. Remove the drawing. We've got the high, we've got the low. There's the entry, and 35.98 target, 21.85, 2.2. It's a pretty strong one. CRC, pull up the US version of that. And I probably wouldn't touch this, but the lower highs, but 49.68 would be the target. D, Domino Energy. Here's the high, here's the low. There's the entry, 63.89, 60 trades, 78% profitable, but a negative profit factor. This one, the losers chop up the winners. So be careful right there. That is a negative, net negative. Even though it trends, hits the profit targets more often than not. When it does lose, the losers eat up the winners. This has 60 trades, so it is definitely a statistical population. D4. It's a choppy hot mess. I just don't like these ones that look kind of like an EKG. This one's been in this trade for a long freaking time and just hasn't been able to make any move higher or break down and go lower. You could get involved if you want to, but it doesn't have any, stock at rest tends to stay at rest, and this has no indication we're going on up to like 25. DFGR. This one's been in it from back here. Current setup. Here's the high, here's the low. Move above that 618 would kick off a 28 target. It's been in this since back here. And we came up just shy of the target at 27.96, basically 28. And you have opportunity to get in again. DGX. This one stopped out recently. Here's the high. There's the low. Kicking off the entry. 201.90. And it's a fair one. Has statistical significance. 81% of the time we go on to hit the target. Profit factor 2, which is almost twice as good as the 2.2, which is almost twice as good as the standard, the average. ED, just a sideways chop of mess. Already in the trade from back here. It hasn't made any trend. So it's not really a trend, right? This is not a trending stock. It's a chopping stock. It's just chopping sideways. Stocks at rest tend to stay at rest. We're really looking for a nice trend. This is a trend pullback continuation pattern. So we're looking for a nice uptrend that gets a pullback to the roadmap line, and then we get that continuation. And we're trying to take advantage of that right there. This downtrending roadmap line, looking like an EKG, just not trending. Now here, this is more like nice uptrend, pullback, potential continuation. That's more like what we're looking for. Here's the high, here's the low, and I clicked on the wrong fib tool. Here's the high, here's the low. Entry 39.60 would be the target. 12 trades, no statistical significance. And 75, 1.3, those are just average, right in the average. 75 is the win rate for this pattern. 75% of the time we'll continue right on up there. Profit factor 1.2 is the average. So this is just a real average ticker, even though it only has 12 trades. EPD. Sideways, but we do have a bounce in there. This has been in it from a long time back. Looking for, like, let's see what target that would actually be looking for. 35. Whew. This little baby move, looking for 33, and those aren't big numbers, so be careful. ICF, more sideways chop. Been in it for years. Well, for almost a year. Drifting on down, just no conviction. IYR, same thing. Been in it for a long time. LAMR, here we go. Here's one that's finally moving. Here's the high, here's the low. Entry, target 136. Now, it does lose more often than the average. Only 67% profitable, but the profit factor is still positive. It does have statistical significance. It's 31. On average, it fails a little more often than the average. So that's not your bag. Don't trade it. And on average, it has a little bit lower profit factor than the average at 1.2. Now, this is less than 1.2. So maybe you don't want to get involved in this. Still a good trade. Still a good setup. There's the upside. 136. Stop is $1 below the low. Always $1 below the low. NE, get the US version. That last one worked out that we talked about back in like October. Here's the high, here's the low. Entry right there, target 37 or 34. 37. Target 34.70. I'd go a little bit less, like 34.50. Stop is $1 below low, down around 26.50. No statistical significance to these numbers down here. You can flip a coin and get, 3 heads in a row. So those don't mean anything on NE. NI, this one does have 42 trades, 80% profitable, and 1.14. Not bad. Not bad at all. Entry, target 45.40. That's not a bad one right there. Now, the difference between this and the market roadmap list that I put out every week, the market roadmap list is based on the top 400 by options. These are out of all the almost 4,000 tickers that move 25 cents or more on average every day. So a lot of these don't have options. And that makes it, not everybody wants to play them if they don't have options. So be careful. ODC, downtrend still. PFGC. I use an aggressive Python tool that finds a very kind of strict bounce like this right here. It looks for any high above the roadmap line, any low down here, and a close above the 618. Now, the algorithm that I have that runs in, when I pull up the chart and look at it here, the algorithm is much more discerning and won't take an entry unless we're on a bigger picture bounce. But it has to be in a certain time frame. Can't be too slow, otherwise it doesn't work on average. Here's one. Despite being on the list, I would look for a higher move and kick off the bigger picture. This is an uptrend, a retrace, and a potential upside to 2680. RWR, been in it for a long time and just sideways, looking for that 102.80 target. SCHH, sideways for a long time. I probably wouldn't even get involved in this. Slightly downtrend. Shell, a little bit of chaos here on Shell recently. Did stop out the last one. Sets up a new potential. High, low, 76.60 target. Right there. Here's the high, here's the low. Entry, target 76.70. SPH. A lot of sideways chop. Picking up a lot of these lately. Market's been just kind of grinding for a long time. Entry, target 19. SPLV. More of that sideways chop. Here's the high. Here's the low. Entry 75.70. Target SUI. And nope. And nope. Yeah, so kind of a bust on most of the list. But, let's check out, see if we can find anything direction-wise for the day. Now, yesterday, kind of looked at this with the potential. Oh, look at that 30-minute bounce there. The options were kind of telling us we'd stay in this pink box here. It looked like we were going for the bottom yesterday, but we turned around and went for the top. So now here we are at the top, and now we may take a trip to the bottom. So more volatility may be in store today. Be freaking careful. That's what SPY is kind of telling me at the moment. I have a link in the description for Bullflow if you wanted to get a piece of this. Let's see if it'll pull up. Yeah, there we go. We've still got potential right here. 695. The big levels all the way up to 700 now for tomorrow. Biggest level on here at 695. We don't have any billion-dollar levels on here today, interestingly enough. We've lightened up the levels down here at 684 and 680. So it's kind of softened up the playing field a little bit for SPY. QQQ. Let's take a look and see what we got today. 627 built up the big level here. You know, yesterday we had a giant level down here at 610, and that's pretty much been eaten off. Like the giant level was down here, and it pretty much evaporated. We got down to about 615, maybe a poke into 614. Then we set up a strong reversal. So right now it looks like 627. It's probably where we're heading. The gamma bubble right now sitting here up to 630 potential. You can see these bright green ones. We've moved back into positive gamma. We were in negative gamma quite a bit yesterday. Exasperated the moves. Then overnight, we're up here in the 625, 626, 627 area. These bright greens kind of highlight the bubble. There's nothing really out the next week. So we got a little bit of upside pressure to go in today. Let's go check out what that shows. Oh, let's turn this off. Let's go check out QQQ. This high, this low. Yeah, up to 631 based on the price action right here. That big expiration does take place tomorrow, so be careful out there. We can see it poke up on up into that 630 area, possibly a little bit through. Now, if we get back down below the gap, like this big gap up overnight, if we start cruising down through it, we may go on down to that 610 area there. It looks like the higher levels up near 635 have kind of evaporated off a little bit. So it looks like we're kind of capped in here at the top, probably at 630 to 631. So that's probably the range we're going to be in through tomorrow's option expiration OPEX. Right there. Any questions? Is there any truth that Tesla shareholders will have the opportunity to purchase the first shares of the Starlink SpaceX IPO? Starlink is just a brand that's owned by SpaceX, but you know, asking Grok on X would be the better way to find that answer out. Grok watches everything Elon says, so I think there's lots of rumors, and I don't know that anything is concrete until it happens. So Be careful out there. Be careful out there. Have a great day, everybody. I'll be on Market Masters at 11:30, and Jack and I will talk about opportunities to make some money selling credit and stuff. And I'll be back same bat time, same bat channel tomorrow for another Morning Monster. Have a great